Hello guys, how's it going? And it's also Bedako here with Learn to Trade with Ease. And so if you are new here, you're welcome. And if you are not in our Telegram community, it's Traders Hub Community on Telegram. So Traders_Hub Community. Alright, so without wasting my time, let's jump into the chart and see what we have
I'm going
for today.
to expose you to the two-step process to take the trade. And what you'll be needing is the Asian range. Okay, so pretty much you just be needing two indicators that's going to plot out exactly what you're looking for. So the very first one is the range. When you come a new day, our trading day, we normally like to come on our chart at 6 a.m. GMT. Okay, so when it's 6 a.m. we know that it's time to jump on our charts, right? So use a vertical line to mark the 6 a.m. time. And then we are seeing what happened. We are waking up to a new day. Now we want to know what happened during the Asian session. That is about 8 hours of trading period, right? So now what do we do with the Asian session? We use that as our range heading into the London session. When the Asian high is broken, then our bias for the day will be to sell. And when the Asian low is broken, then our bias for the day is to buy. Is that okay? So now let's start our day. We come on our chart and then we want to mark what? The high and the low. So say this is, so the red or the burgundy shaded or the wine shaded area is our Asian range. Okay, so we mark it out and we say this is our Asian low, and again we mark out the high before what? 6 a.m. GMT, and then we say this is the Asian high. So when it's done, you want to see what happens after 6 a.m. Does the market break the upside? Does it go to the upside, breaks the upside, or it goes to the downside? So today we see that the market is breaking to the upside. That means our bias for the day is we are sellers. We are not going to look for buy opportunities. Now we need a confirmation. How do we get a confirmation? We look for a fair value gap, the presence of a selling fair value gap. That is a bearish or a red fair value gap to be our entry. So with that, to see our fair value gap, the indicator we're going to use is called FVG. That is fair value gap by nephew sum. So you go to trading view, you search indicators, you search for FVG, and you add it to your chart. This very first one. Is that okay? So now what we are looking for is the presence of a red fair value gap, and then we have an entry for our sell. Now we know our bias for the day, and our bias is we are only looking for a sell because the high of the Asian range has been taken out. So we are always coming on our chart at 6 a.m. GMT, right? That is an hour before the London Open. So let's say Frankfurt Open, that's the time we are coming on our chart, right? So right now we can see that the market keeps going up, but we are not biased for the day, thanks to the market showing at its hand by breaking the high. So at the end of the day, we just wait and keep waiting until we see the presence of sellers with a fair value gap. Sometimes there can be the presence of sellers without a fair value gap. Then we are not interested in the market. As you can see, a bearish candle is being printed, but we don't have a fair value gap yet. We are only going to get engaged in this trade when we see a red fair value gap. That is telling us that there's the presence of sellers with enough momentum to push the market to the downside. So you can see we have a fair value gap, and this is what we are going to use for our sell trade. As you can see, this fair value gap. So we assume that the market will pull back to it, and it just did. Then we go for our 1:3 risk to reward on this trade. As usual, I always go for a 1:3 which happens to be a sweet spot. Okay, when you're trading pounds, euro, USD card, Australian USD, New Zealand USD. So with a 1:3, how is it looking like? It's more like a 10 pip stop loss, 30 pip take profit, or 15 pip stop loss, 45 pip take profit. So in my case, I'm using a 13.5 pip stop loss and a 40.5 take profit. Is that okay for a 1:3? So with that, we got activated on this trade. So as long as we are concerned, we are sellers because the high of the Asian range got taken out. So if we see another fair value gap, then we are going to put in our second trade. Are you getting it? So if every trade you are risking 1%, then you are aiming to gain 3%. If you are risking 0.5%, you are aiming to gain 1.5 because you are trading with a risk to reward of 1:3. Are we good? So we keep observing our chart. It's one or two things. Our trade will either go hit take profit or it'll hit a stop loss. Right. But at the end of the day, we just keep waiting to see what the market is going to do. And when we get a second fair value gap, we are going to use that for another entry. Okay. And when the fair value gap is huge, relatively bigger, you can see the fair value gap we use is very small. But in case we have a bigger fair value gap, then we are going to use 50% of the fair value gap as our entry. That is what we're going to do. Okay, but when you have a small fair value gap, you use the tip of the fair value gap for your entry. Are you getting it? So the market is going back. It put us in some profit, almost over 1:2 risks in profit, and then it's returning back to entry. Are you getting it? So I don't suggest that when you take a trade, you put your stop loss. When you're in profit, you adjust it because the market can just come and retest your entry and then go in your direction. So before you take the trade, you have to be willing to accept the risk involved. It's either you are losing 0.5 of your prop account or you are losing 1% of your prop account, depending on your risk appetite. Are you getting it? But the market always goes up and down, so you just have to be aware of this when you are trading the live market. Is that okay? So yes, you can see the bearish presence coming in again. Now we have a fair value gap. So with this being a huge fair value gap, we are going to take 50% of the fair value gap to be our entry. So we take our gun and then we have our 50%. Right, so the 50% of the fair value gap is what we are going to use for our sell entry. Then you have the market pulling back to the 50%. So we get activated on this trade. And then we go for a 1:3 risk to reward. Is that okay? And so based on our system, what we have to do is wait for the conditions to be met. Either the Asian high gets taken out or the Asian low. We have another fair value gap, which is going to be our third sell entry. Okay, and since it's not huge, we are going to use just the tip of it for our entry, and then we go for a 1:3. Okay, we also have another, so we have 4 fair value gaps. But what I advise is when you have more than 3, you don't want to continue taking the trades because the more fair value gaps you are getting, now it makes it difficult to hit take profit if you are going for a 1:3 on every new trade. So after taking 3 trades, you are good for the day. Is that okay? And then you are looking to also take trades between the hours of 6 a.m. GMT till 6 p.m. Okay, because at 6 p.m. you realize that the Frankfurt session is over and the London session is also over. Okay, so now the volatility in the market reduces. and you don't want to get active when London session is over and when the Frankfurt session is over. Okay, so you want to give yourself a 12-hour room from 6 a.m. GMT till 6 p.m. GMT. So you can see that our trade just got activated. Our third trade just got activated. So we'll be in 3 trades at the moment. And as you can see, our first trade has hit take profit for 1:3. So provided you risk 1%, then the potential of this trade is to what? Gain 3%. Provided you risk 0.5%, then the potential of this trade is to gain what? 1.5%. So after 3 fair value gaps, 3 consecutive fair value gaps, you don't want to take any further fair value gaps. So you can see that what the fair value gap is showing us is the momentum is to the downside because they are red fair value gaps. Supposing we're having green fair value gaps, then it will be telling us that the momentum or the volatility in the market is to the upside. Are you getting it? So the fair value gap helps us see what's going on behind the scene. Okay, so there's more sellers in the market. The market keeps going down aggressively and creating gaps or leaving market imbalances. Okay, and with this, anytime an imbalance is created, we expect that the market will pull back to balance itself and then continue in its intended direction. And how do we find our direction for the day? By using the Asian range. So we check the Asian range, and then that is what 8 hours of market play time, and that is enough to tell us what to expect for the next day. And so as you can see, I think our second trade might have also hit take profit for another 1:3. Okay, it got very close to TP, and then we are good. So that is the end of the trading day. Are we getting it? So now, from now, we enter another Asian range, and we don't want to be involved in the market during the Asian range. We wait for the Asian range to play out, and when the Asian range is done, we come in the morning 6 a.m. GMT, trading the London session. Are we good? And then we are good to go. So pretty much that is it. That's what I wanted to show you. Keep it simple. It's more like a 2-step process. The first one is wait for the Asian range to be swept, and then you get to know your buyers for the day, and wait for a fair value gap to be your confirmation for an entry. I hope that is good. All right, so catch you in the next one. Peace out. And you can backtest it on EURUSD, Pounds USD, Australian USD, New Zealand USD, USD CAD. These 5 pairs tend to do well with this simple strategy. Alright, catch you in the next one.
Hello guys, how's it going? EXNESS here, and this is the year you learn how to trade the financial market. A lot of people have been asking to sit with me, come in person, and this is the year I make it happen. So you have the opportunity to come and sit with me, come and learn how to trade the financial market, learn to trade the cryptocurrency market, learn to trade the forex market, learn to trade the stocks market. Are you getting it? And you have the opportunity to do so with me. So catch you inside. Peace out.